So we are on GDAX, and I trade Ethereum on GDAX. I don't have any money at the moment. I'll be getting some money put in shortly, and we're following the trend of the market. Had a little upside, had a little downside. You can follow the volume blocks here and the resistance support from where they are here, and variously change these timelines. But what is useful is to also have be able to use this TradingView.com, and I'll go through the indicators that I've kind of worked out. So VWMA, it's a moving average. TMEA, it's a moving average. I've experimented with these. You can go into format here and you can change this number. I've set them to the same as on the GDAX. That's a 12 and a 26 moving average, and I guess that highlights it. And also another index that's very useful is to have this 14 volume index. Now there's a corollary here between what's happening when the green line, which is the 12-day moving average, moves above it's in relative positive territory. When the blue line, I don't know technically what these are, but when the blue line moves above the maroon line, it's in a positive situation. So we get some indications from this of where we might buy and sell. So following along, and the time frame to look at is the 15-minute time frame, not the 5, because it's too much fluctuations there. So you can obviously go from one to the other. You can follow it on here on the 5, for instance, and see where it's going if you're in GDAX. Otherwise, following these two, looking at the crossover now, there's a crossover at this point here where we've gone blue up and green up. So they're both in positive territory. That could be a good point to consider getting in at some risk value. So I might say, for instance, put half of what I've got in there. 50% is a good kind of measure of risk, I think. And then you just have to sit and, I guess, hold on and watch these two. They're coming together at the bottom. They're getting a downswing. And now there's a separation to the upswing, so they're in good territory. On the top of this upswing, it's up. One might consider taking half of your position out and taking that just as a cautionary measure, or not. It survives the downside. Of course, post-event analysis is a lot better, but we're still above the blue line up here and above the purple line down there, or maroon line, and definitely when it crests this peak here, takes some percentage to get out, like 0.5%. This is like 49, so 50, it's like 60, so 61, 62. You have to preempt it on limit, so 62, and probably take the rest out. Now that's a good experimental base from which to kind of evaluate as time goes by how these things are working. For one, you want these signals to tell you when to get out preemptively. This is the second swing up, first swing, second swing, third swing up. 3 is good. 3 strikes and you're out. You know, that's a famous saying, 3 strikes and you're out. Well, 3 strikes here and it's probably time to get out. So there's a possible approach to being careful. Half in, quarter of your half out, the rest of it out, and take that little bit, and then just follow along and see how it goes. Play the game with the lines on paper, so to speak, and see how successful it is, and get some experience with how this transition between the purple and the blue for the volume index, and the blue and the green for the moving average index work together when they're both in positive territory. Pick up some information in regard to that is established as a good signal because it's repeated time and time again, and you work out some method of deciding how and where you get out. So I'm kind of just put this together, and we'll be kind of following along and seeing how well this works out. And I hope that little bit of a experimental overview helps you out.